Good morning, traders. Welcome to the Dots Trader Morning Call video for Tuesday, December 8th. Did get a little bit of a push lower based on the crude oil stocks that have been tumbling in the pre-market. Also, the crude oil contract, CL, really took it on the chin yesterday and really put pressure on the S&P as it's heavily weighted in oil stocks. So where do we go from here? Well, we continue to talk about tax selling this next week and the following week. And then if you look at the tax selling, right, we always sell what's not working, and what has not been working all year was energy and material-related stocks, right? So that being said, that's going to be the first one to go. So we're going to get continued pressure on that. I do like the gold trade. We talked about that. I do like actually oil setting up really nicely. If we get a big push lower, anywhere in the low to mid-30s, I think you could take it and start nibbling. And even if you don't want to trade the crude oil contract, stocks like the Chevron, the ConocoPhillips, these are the stocks that have been getting killed and just getting killed off of oil, not really related to the performance of the company in itself. Now, yes, they do get hit a little bit because crude oil obviously is at its lows, and when they're extracting, they don't get as much money, and it doesn't pay sometimes. But you still got to talk about fundamentals on the company. I think these companies are still good companies. ConocoPhillips, EOG, CVX, Exxon, even Exxon, which is so hated. That's why I like it. As being as a contrarian that I am, I definitely would like to take a look at some of these names. Not right now. We don't want to catch a falling knife, but we need, we need a big flush and then a couple of days, 2, 3, 4 days of base building. So we do have some time, but keep an eye on that. Also with GLD, same thing. We have a bullish falling wedge pattern that did break out in the GLD contract, the ETF tracking for gold. But if you look at the GC contract, it's still in a big bearish rising, bullish falling wedge. Sorry about that. So we're waiting for a breakout or a breakdown, and I think the catalyst is going to be the 15th and 16th of December when the FOMC makes their announcement on rate decision. I think that's going to put a big catalyst in a lot of these commodity stocks because the dollar will be affected on that. So keep an eye on the GLD. I don't think it's ready yet. I do think we see lower prices. I'm hoping maybe 100 par in the GLD and 1,000 in the GC contract, or maybe even lower. I'd love to see a 980 print, 980 in the 980s in the GC. I think that would put an interim low in gold for quite some time. So I'm watching that closely. It could happen at any given moment because GLD, and as you know, the GC contract could move 20, 30 points in one day. All right, let's take a look at the USO. Same thing. Now, USO is a tracking for oil. I personally, as low as it is, I'm really not a big fan of playing it. But that doesn't mean that you can't get a big move out of it once oil starts to move to the upside. But again, you'd be catching a falling knife. I would stay away from the long side at the moment until it stabilizes. Next would be the spiders. You can see we have this big bearish rising wedge. We fell out of it. And now what does it look like? A nice M formation, right, with the right side forming. So we had down day, up day, down day, and then we're going to have another down day at least to start. So markets have no memory from day to day, which is not a good sign. But for the day trade, it's not bad. On a 5-minute chart, if you looked at the spiders yesterday, we had one move, and then we chopped around pretty much most of the day. So pretty quiet as far as day trading is concerned. IWM is another one of the canary in the coal mines that we'll be talking about. In this big, large symmetrical triangle, not even close to the highs. So if this starts to break down and takes out the lower trendline support and we get a back test and fail, that would be your cue to look to get long in IWM, the Russell 2000. I think the markets are in trouble, and I think that this market divergence eventually will kick in. Might not be the next 20-something days in December of 2015, but rest assured, I do think this market kicks in. Unless the IWMs and the IYT, which is the transports you see here, unless they start to move to the upside, I think these two indexes will push this market lower, okay? And this is the IYT, again, symmetrical triangle, and already has broken down and back tested. So this, to me, we lose this low here from 2 days ago. I think you test the August lows. No question about it. And then lastly is the, sorry about that, guys. Lastly is the Qs. Didn't have that queued up. You could see that it has been, let's get to that Dots Trader chart real quick and open it up just a touch. You could see that it's been holding in quite well with this gap area here. We did get that fill. Now let's see where this goes. Remember, I pointed out many times a few weeks back, watch the Nasdaq, the QQQ. You know, it's only a handful of stocks, the top 10 stocks that are really moving this index. So if you think technology is really strong, think again. Look at the leaders. They're starting to break down. When these leaders break down, guys, that's another cue that the markets are in trouble. Just remember that, okay? Have a great day. Hope it helps. We'll speak to you tomorrow. Take care.